Okay, so for our first session of the conference, we now move to our annual macroeconomic keynote. Each year, we like to set the scene for our delegates with this particular keynote, and what it does is address the winds of geopolitical change, as well as looking at their relevance to our industry specifically as well. Your speaker today is somebody who is a friend of mine and also has spoken at AviaDev before and is always up there when we do the questionnaire as one of the most in demand. So expect fireworks, expect laughter, expect entertainment. Daniel Silke is a lauded economic analyst and avgeek. He's taken time away from cruising around the Indian Ocean or a different ocean where he often delivers speeches. So yeah, expect much of this and lots of energy. And please join me in welcoming Daniel to the stage.
Hello, everybody. Morning all. Good to see you. Good morning. And thank you very, very much, John, for inviting me to come and be the opening speaker this morning. Your Excellencies, South Africa, I think we coined the term all protocols observed. It's our term. A lot of protocols in South Africa, and we can eliminate all the rest of them. So all protocols observed. John, thank you for inviting me. Thank you to AviaDev, and it's wonderful to be back to present to you a macroeconomic and a little bit of something else overview of where we are at. John has given me 30 minutes to cover the world and to cover the complex nuances that currently exist. And let me tell you, I can start doing a presentation, but within a moment or two, whatever I say is going to be outdated. And there'll be some fresh input and some fresh news that you'll all find out as soon as I finish talking. And you'll say to yourself, well, this guy didn't mention that, because that's the nature of the world that we're in. We're in a fast-changing, highly dynamic world, and especially when it comes to economic themes and trends, and obviously political issues as well. And for my lot in life, that's what I do. Now, I've called the presentation Africa's Challenges and Resilience in a Turbulent World. I think all of us will agree the world has been fairly turbulent. And let's make sure that my clicker works so that I can give you a sense of the turbulence. I'm going to click, and let's just see if it works. It's not working. There we go. Some turbulence for you, because I know this is a high-risk loving audience. You're in the business of aviation. Aviation is not an easy business to be in. And I would imagine that if you've looked at the world over the course of the last year or two, well, particularly perhaps over the last year, particularly over perhaps the last 3, 4, 5, 6 months, you will sense a degree of volatility in the world. And when it comes to global economics and global geopolitical risk, there is absolute volatility in the world. And all of us, it doesn't matter whether you're in aviation or whether you're in some other particular industry, are all buffeted by these highs and lows, by the turbulence that we see at the moment. Now, there are many causes and reasons for turbulence, and I just want to make sure that this does work, because I'm getting a rather slow feedback on this clicker, and I need the clicker to work. So let's just make sure the clicker actually works. There we go. Well, there we go. Now, there are many reasons for turbulence in the world. There are many issues that I don't agree with when it comes to the US president. Let's just see if that will work. Oh, no. Many issues that I don't agree with the US president, but I must say that his moves on stage are more or less the same as what I do. And I think there I can find some synergy with him. We in South Africa have obviously had an engagement with the US president, but the effects and implications of that new presidency in Washington have reverberated around the world and affects almost everything that we do, and also much of the forward planning, if we can indeed forward plan, as a result of this level of volatility. Our encounter as a South African with Donald Trump, clearly, as many of you will watched on television, was certainly quite extraordinary, and I think also set the scene for what will be, in a sense, a different relationship between the United States and Africa, more or less as a continent, and I'll come back to that in a moment. And there we go. You get a sense of that difficult nature of that meeting, and it is certainly possible that this kind of encounter will be felt by many global leaders who come to the White House, putting global leaders on the spot, so to speak, and confronting them with issues. You can argue whether we handled that particular issue well or not, but nevertheless, I think we came out of it relatively ahead in terms of the overall spectacle that that presented to us. Now, the big issue, I think, from an economic point of view, clearly has been the implementation of a new tariff regime coming out of the United States. And whilst there are many issues, and I'll mention them later on in this presentation, there are many issues that are not US-oriented. There are many issues, as you've started to discuss yesterday, as you've been discussing for many years, that are domestic continental issues, that are regulatory issues, that are political stability issues, that are domestically rooted, whether we are here in Tanzania or whether I'm back home in South Africa. So we can't just say that all issues currently in the world lead back ultimately to Washington. But there's no doubt that the hot topic today has been the issue of tariffs. And for those of you who like to watch Netflix and like to watch Squid Games on Netflix, you will appreciate the red light, green light nature of the new tariff regime coming out of Washington. You never quite know when that tariff starts. You never quite know when that tariff ends. And you never quite know whether you're going to survive this particular tariff regime. Now, we've had a breather, in a sense, over the last few weeks when it comes to this tumultuous volatility that we've seen on markets. Markets, of course, took a deep dive at the first sign of the new tariffs. They've come back substantially, and they are digesting more of this relative uncertainty that we now see in the world. But this US tariff policy, make no mistake about it, and the broader ideology coming out from Washington is upending domestic economics and, to a degree, stability. And it is changing geopolitical relationships as well. And we on this continent are not going to be left out. The US relationship with Africa is shifting and changing. And of course, we know that Africa also has ongoing relations with other major powers. And I'll come back to that in a moment. We have a White House now that is much more transactional than it has ever been. It wants its pound of flesh from Africa, and it is prepared to do deals. It's prepared to do deals with anyone, with friends and enemies, and it will treat friends and enemies with quite a hard tone, as we've seen in terms of how the White House has been looking at potential deals with the EU in terms of trade as well. It's an unpredictable White House as well, and we have to be used now. We have to be ready for a degree of unpredictability coming from a major trading partner like the United States. But amidst all of this firmament, I suppose, as a result of the new sheriff in town, as President Trump's press secretary referred to him as, there is a reality check on that US economy as well. The implementation of tariffs have taken their toll on the US economy. And you've seen those figures. Now, these are the figures of the last quarter of US GDP growth, and you've seen that figure drop and drop quite substantially. Of course, when the United States catches a cold economically, all of us around the world suffer. The same would be said for China. Our relations, and I say the continent's relations with China, has increased tremendously over the last decade. If Chinese growth slows, we will also feel it. But for all of the tariff talk in the United States, it's taken its toll on that US economy. And there is, of course, a fear. There is a fear. By the way, I know there's a wonderful hat doing the rounds here. Make aviation great again. Make aviation great again. That's what my MAGA stands for, and I hope at least to get my hands on one of those hats. Shawn Mendes, please take note of that. There is certainly a fear, of course, in the United States that tariffs can reignite inflation. Now, we've seen relatively benign inflation figures come from the US in the last reporting period, just in the last 24 hours, but it is certainly possible that we will see a more delayed reaction with somewhat higher inflation coming through in the second, third, and perhaps into the fourth quarter this year. For President Trump, the implementation of tariffs, the threat of inflation, a dent in consumer confidence in the United States has led to less than perfect approval ratings for him. And when presidents see their approval ratings start to drop, they have to reconsider very often some of their actions, particularly in the United States, where consumer sentiment, fear about inflation, fear of a dropping standard of life does translate into lower support for the elected president. And in fact, even here in this Fox News screen grab, I might add, a network quite friendly to President Trump, you can see that the approval ratings for Trump certainly are relatively low in his first 100 days. So there has been a kind of an approval break on the ability of Donald Trump to pursue perhaps the level of tariffs that he would like. And you could very well argue that by implementing such a volatile array of tariff regulations, he has, at least in the short term, shot himself in the foot from a popularity point of view domestically in the United States, and there's an attempt now within the US to backtrack from that and to provide perhaps a more of a compromised and nuanced approach to the implementation of tariffs. But I think what we can say, and when we look at the broader global economy, whatever the outcome of the negotiations that are still underway, and we are likely to see the United States come within the next week or two with even more tariff proposals, almost unilateral tariff proposals, where they cannot enter into deals relatively quickly, what we can say is we will all live in a global environment in which tariffs are going to be higher than they were before. If you're in the United States, you can understand the theoretical advantages of tariffs. It does rake in cash. It does offset a deficit. You can shift your system from the collection of taxes, personal taxes, where you provide relief, to, of course, taking in revenue via tariffs. You can reduce your budget deficit as well during this process. So you can understand theoretically the appeal of tariffs if you're in the United States, but for all of us, we're going to operate in a higher tariff environment. And the effects have been quite dramatic already from a global perspective. The global trade outlook generally has worsened, and if the global trade outlook worsens, then all of our businesses are affected, all of them. And I'll come a little bit later to the issue of cargo in Africa, and we've seen also a drop in cargo volumes coming into the continent. We shouldn't underestimate the slowdown in global trade and the implications, obviously, for our particular or your particular sector as well. So from a growth perspective going forward, global growth is expected to be relatively uninspiring at about 2.8% this year. Now, these are the figures from April from the International Monetary Fund. And you can see on the screen global growth at about 2.8%. That's down from last year. And you can also see on the screen there on the right-hand side, there's Sub-Saharan Africa looking at about 3.8% this year, down from 4% last year and a little bit up next year. When I tell you that I've got a tough job because the revisions to statistics are coming now almost on a daily basis, here's the new projections from 2 days ago from the World Bank. And the World Bank's projections for global growth are down now from the IMF's 2.8% to only 2.3% for this year, making it the slowest year of global growth since the late 1960s. So make no mistake, lower global growth is going to affect us all. The OECD came out with projections just about 2-3 weeks ago, and they also similarly show a downturn in most major economies. I highlight you again to the United States projection of 1.6% GDP growth this year. That is down more than 0.5% on their previous projection. That's quite dramatic. And again, you can see very little excitement coming out of the euro area in terms of growth. China's growth also at under 5% is relatively lackluster, certainly for China. And the big positive growth story remains, given its consistency, India at higher levels of over 6% or so. So it's not an easy growth path for many countries across the world. And of course, our continent has the implications for our continent as well. Now, we've been relatively resilient when it comes to growth. We're coming off a lower base, which is the first thing that I want to say, so our growth should be a little bit higher. And our growth needs to be higher because we've got a very high and increasing demographic across this continent, and we also have substantial social needs in order to uplift our people, to reskill them, and to provide necessary social services for them as well. So we need growth. You cannot survive in an environment in which there isn't real growth. You know, it's all very well saying, you know, a country has 5 or 6% GDP. It's got to translate. It's got to translate to ordinary people on the ground. And we have seen growth across this continent be fairly resilient. But again, you know, our growth as a continent is now going to be, let's say, just under 4%. It's a lot better than the US that are going to grow at 1.6%. But that 4% for us probably should be a little bit higher. We are also feeling, and I'm talking continentally, we are also feeling the after effects of growth as well. Still, real GDP growth in 21 African nations will exceed 5%. And if you can secure 5% GDP growth in the current environment, you certainly are amongst the top countries in the world in terms of statistical growth. And that's impressive. And there are 21 African countries who can tick that box. Very impressive. And there are about 4 or 5 countries that may even reach a magical figure of about 7% GDP growth as well, and they are on this continent. And that's why you are all here. That's why there is an excitement and a buzz. When I do conferences here on this continent, you feel that excitement and a buzz, because coming off that low base, the potential for growth obviously is a lot higher than, let us say, if I go and do a conference in Europe for that matter. From a regional perspective here for us on the continent, this region or sub-region of the continent, East Africa, continues to be the star performer. And for those of you in this room from East Africa broadly, give yourself a round of applause that you are leading the growth story on this particular continent. I wish I could say that about my home country, South Africa, because frankly, our growth is exceedingly disappointing. And when you look at Africa's overall growth, the big economies of South Africa, Nigeria to a lesser extent, but South Africa has dragged down some of the growth projections because of the size of our economy relative to other countries as well. Still, East Africa looking good, West Africa looking good as well. Give yourselves a round of applause from West Africa, because you guys are keeping up that average and putting it rather nicely into just about 4% GDP growth on average. So pretty impressive results. But again, I'm often asked to talk about Africa, and there are substantial differentials from country to country. You can't lump Africa together, as I often do erroneously. If we had to drill down, and I don't expect you to drill down into those figures, you can't even see them. If you can't sleep tonight, I will give you this chart, and you can study it before you go to bed to lull you into sleep after the lovely event tonight. But if you look deeply into the chart, you would see different countries have different inflation paths at the moment. Different countries have different exchange rate paths at the moment. And I must tell you, the prize, and John didn't give me a budget for handing out a prize for which African country has the strongest currency at the moment and is probably, statistically, the strongest currency in the world. Ghana. Ghana, I don't know if anyone's here from Ghana, but Ghana has the strongest currency in the world currently, a very impressive show in an array of countries in which currency weakness is often one of the key impediments to growth going forward. Broadly speaking, if we look at projections for inflation and public debt, which has been an issue for Africa over many, many years, we are starting to see headline inflation at least become more manageable across many jurisdictions, as the chart would indicate. And even in terms of public debt, African countries are now beginning, and I think quite rightly so, to find new mechanisms to manage the burden of public debt. But the difficulty for Africa certainly remains that the costs of servicing debt on this continent amounts to about 14 or 15% of all government spending. So just servicing the debt crowds out expenditure on infrastructure and critical social services. And this remains clearly an impediment to growth going forward. Now again, we've seen the World Bank just in the last couple of days revise Africa's growth story again. And they haven't revised it up, I must tell you, they've revised it down. And you can see here on the charts, and you can see Sub-Saharan Africa there on the left of the chart, the forecast for 2025 is revised down by about 0.4%. So on average, the growth expectations for your individual countries are, generally speaking, not everyone, but generally speaking, going to be revised down by at least a quarter or 1.5%. Now, there's a busy slide for you, just to get you into the mood. And I just want to highlight to you a couple of the better growth stories coming out from the continent. Again, we can see great growth coming from Côte d'Ivoire, over 6%. Ethiopia scoring one of those rare 7% scores in terms of GDP growth expectations. Ghana doing quite nicely at just under 5%. Kenya, I always say Kenya a little off the boil. I mean, I shouldn't say this about Kenya. A little bit off the boil at below 5%. What right do I have to say that? I come from a country where our GDP growth is barely going to touch 1% this year, and Kenya is going to do between 4 and 5 times the growth of South Africa. So Kenya, I still believe, a good growth story for this year. Rwanda still nicely in that 7% star team category. Senegal, again, looking pretty good. Here we are in Tanzania. Strong growth coming out of the broader Tanzania. You're looking at probably just under 6% or so. And even on the revised downward growth projections, Tanzania has held its own in terms of overall growth. So again, for you here in Tanzania, you can give yourself a round of applause that you are consistently now a good performer in terms of this. Uganda doing nicely as well, East Africa region really showing its mettle, and Zambia back on track actually in many instances with really nice growth going forward. And there you go, just to show you that I'm not sort of chauvinistic about South Africa. I do highlight South Africa there at that rather uninspiring, if I might say, and my fellow South Africans will forgive me here for being critical, that rather uninspiring 1% GDP growth rate for this year. Your projections here in Tanzania in terms of government policy look as though they're very healthy, but again, what's on paper and reality can change as a result of many of those global challenges that I mentioned. Global energy prices have certainly come off over the last 6 months or so. Now, when energy prices decline, that's generally good for inflation, and you're starting to see that filter through into African inflation figures. It's generally good for your industry as well. When fuel costs come down, it's another input cost that actually can be saved in a sense. But obviously, for those oil exporting nations on the continent, there is more trouble ahead, and you've seen that particularly for a country like Angola, where growth rates have been a little bit more disappointing, reliant largely, or at least historically largely, on energy and oil exports. Interest rates across this continent have remained stubbornly high. We are starting to see some countries reduce interest rates. Kenya have done so just in the last week or so, and that is a positive ultimately for the Kenyan economy, but interest rates do need to soften, especially if inflation rates are softening as they generally are. Now, for those of you observant in this audience, and for those of you that are mathematically inclined, and you're in aviation, so I'm sure all of you have got, super degrees in maths, that formula should look sort of familiar to you. Anybody know where that formula is? Come now. It's Donald Trump's reciprocal tariff formula that he applied when putting his big charts of which countries would get which tariffs. And of course, he applied those tariffs using that formula to our continent and to just about the rest of the world. And you can just see there on the right-hand side there, countries that were slapped with an initial tariff of between 30 and 50% include Lesotho, a neighbor of mine, Madagascar, Mauritius, Botswana, Angola, Libya, and South Africa at 31%. Poor Lesotho got slapped with a 50% tariff, certainly in terms of that first projection from the Trump administration. These issues are clearly all under negotiation with individual countries, and one would expect compromise to some degree. But clearly, the implementation of that type of formula, which I believe was extremely faulty in the way it was applied, can dramatically affect and negatively affect, particularly these countries with high export components of their GDP into the United States. So we will watch this issue over the next while. And these unresolved trade issues, the unresolved trade tariffs and the threats, also to a degree act as a shadow. They cast a shadow on certainty. They cast a shadow on relationships that are being built. I mean, we all want certainty in terms of business, and markets want certainty as well. And I would hope that we don't have a position where there's a constant sort of leveraging of the threat of tariffs on countries across the world, which really is not conducive to what I would regard as friendly relations. But certainly from the United States point of view, it's not all negative. The US continue to have a keen interest in the extraction and securing access to minerals, and in particular critical minerals, across this continent. So there is leverage for Africa as well when it comes to Africa's natural resources, and in particular critical minerals, of which Tanzania, of course, has her fair share as well. So we certainly have assets across this continent. Yeah, we've got people, which are our main asset, and I've always believed that human resources are our asset, and we've got growing human resources assets on this continent, but we've got the critical minerals that other countries need as well. So never forget, we are not poor at all when it comes to what we can offer. And from a US point of view, the relations with Africa are going to change. Now, there is, I think, a general view, and I can sort of use the term, the US is not going to provide aid anymore, but they are going to trade. So it's trade and not aid, as perhaps we have got used to in the past. There is going to be a US-Africa Leaders Summit in New York very, very shortly, and there is a new sort of commercial diplomacy strategy that's coming out of Washington, and I just put the sort of quote from that strategy, which suggests that the State Department are going to lead more commercial diplomatic trips across this continent. And the US missions across Africa are going to be entrusted with the imperative to trade and do business in a reciprocal, transactional way. So it's not diplomacy as you knew before. It's a new trade-inspired type of diplomacy that, of course, will necessitate perhaps different skills and different sets of compromises, not just from Washington, although they're not that big on compromises at the moment, but compromises certainly from African governments as well. So I'll just highlight to you that it's not as though the United States is abdicating its trade and economic role across the continent. It's shifting and changing. And all of you and all of your governments in particular have to be well aware of those new strategies. From a global perspective, though, Africa is going to feel a reduction in aid and developmental assistance, not just from the United States, but from Europe as well. Remember, European countries are being asked to cough up almost 5% of their GDP now in defense spending. Where are they going to get that money from? They can't tax their populations anymore. They're going to get that money from cost cutting, and cost cutting in overseas development aid. And you've seen already a number of examples where European and, of course, the US have diminished or stopped their aid coming into Africa. We will feel it, unfortunately, when it comes to healthcare services in many parts of this continent that have been dependent upon US AIDS funding in particular. So again, I highlight this point from a governmental point of view, that we are not going to find as conducive an environment when it comes to getting that aid in or getting those substantial amounts in to our continent as well. It would be remiss of me if I was talking about challenges and issues that we face to leave out some mention of the importance of climate change. Now, all of you are also involved when it comes to sustainable fuel, but climate change across this continent is occurring at a rapid pace, and the stats are there. The figures are there to show the warming of this continent. The chart is some of the latest data available on that. And as a result, there are more storms, floods, natural disasters, and we've just had 50, 100 people die in the Eastern Cape province in South Africa over the last 24 hours as a result of floods. So we have to also understand that this issue is a cost to doing business on the continent, and it'll demand responsible governance to up our growth rates, and also the ability of African governments to collect more revenue, probably more tax revenue from citizens going forward. So it's a difficult environment. There are the global issues, there's the climatic issues, there's the tariff issues, and of course we need to counter that. And we've spoken about before, and I've spoken about many times on stage, about the African Continental Free Trade Agreement and the importance of that going forward. The market here on this continent is second to none. And again, you can see on the chart, I mean, just look at that chart there. The size of the African market eclipses Mercosur and the EU. It eclipses that in terms of potential size. Getting this right, or at least getting it partially right, because you're not going to get everything right, really is a challenge that we must all stand up and take and lobby for with our particular governments. But really, all of our countries need to buy in politically to this. And it's slow, and it's frustrating. And there is disagreement from region to region and country to country as well, which has slowed the potential progress of the AFCFTA. And it frustrates me every time I come on stage, but I feel as though it's important to highlight the need for us to pressure for this to be implemented as far as possible to fast-track development across the board. Yeah, there are impediments. There are regional issues that hold us back. We're not going to conclude Africa-wide trade agreements if there are regional conflicts, and if there are already breakups in some of the important regional trading areas as well. The revolutionary politics of the Sahel region is impacting that region and surrounding areas, as is the issues in between Rwanda and Congo as well. So these already are issues that are obstacles or headwinds when it comes to the Continental Free Trade Agreement. And also, when I look at Africa and I look at the potential for the continent, you can be a little demoralized by the fact that there has been an increase in conflict across this continent over the last 10 years or so. There are more incidents of conflict, and the one closest to us, more recently, with new data just in the last day or so, has been the conflict, of course, in northern Mozambique, which is creating tensions in that particular region, very, very close, relatively speaking, to where we are as well. So the environment has become more difficult, and for us in Africa, we have to improve that bottom line there. We say bottom line. That bottom line there, that bottom line represents Africa's GDP per capita. Yes, we've got a lot of people. So our GDP per capita is going to be smaller perhaps than other areas of the world. But look at the gap between our GDP per capita, and these are projections to 2043, with the GDP capita of South Asia and, of course, South America. We are not really making that much progress when it comes to empowering our citizens and creating wealth for our citizens. And if you want to get those, to use that rather nasty term, bums on seats to come here and to travel across this continent, the GDP per capita for Africa has to improve beyond what is a relatively static line going forward. Globally, we're living in a more competitive world, what one would call a more fragmented world. Countries are looking to establish their power, their influence, and you've seen this on this continent. There are many investors in Africa now. There's a clamoring for investment interest here. It's not just China and the United States. It's the Turks, it's the Indians, it's the Emiratis, it's the Saudis. Everybody wants a piece of this continent. And again, the responsibility for us will be to manage this new scramble for Africa to our benefit rather than to the benefit of many of those outside. China already has become the major source of investment into our continent, and this will, I think, continue to play itself out as the United States looks to establish more of this trading role with the continent going forward. Finally, in the last part of this little macro analysis, something about your industry, which of course I'm close to simply because I use most of your airlines all the time, and I come to these conferences because I now know whose name to drop when something goes wrong with one of my flights. It's really the main reason why I come to AviaDev every single year. I think what's interesting about this year and what's interesting about your industry in general is that there is an increasing appreciation for the critical contribution of travel and tourism to GDP. And you've seen that mentioned in terms of the President's address this morning, 30% contribution to GDP here in Zanzibar, which I suppose is understandable. It's a small island, attractive island economy. But across the world, contribution to GDP for travel, absolutely critical and increasingly so. And it's interesting to see how travel can be affected so relatively quickly by sentiment shifts. And I refer specifically here to the sentiment shift about travel into the United States, mainly from Canadians who seem a little bit perturbed to travel into the US. But look at those figures coming from the US. The US economy set to lose $12 billion in international travel spend this year. And I'm highlighting this not just to sort of point fingers at the United States, but if there is instability, if there's political instability, if there's other kind of societal instability, arrivals can be affected and can be affected very, very quickly. The US is currently feeling it at the moment, and again from the chart you can see the overseas visitor arrivals into the United States by global region. Look how down, down, down it is, and you can see that there is 12% fewer African visitors coming into the United States at the moment as a result of that sentiment shift. Americans themselves perhaps have left those heady days of the post-COVID spend and the post-COVID travel environment. Many of them are a little concerned about their domestic economy, about rising prices, and Americans now are showing a reduction in their intention to make international trips in May. My good friends at the Air Access in Cape Town tell me that this has not affected US arrivals coming in on our fantastic services, on Delta and on United into our country. But I think we must flag this issue, that the American economy will play itself out. There'll be a bit of a lag, especially for those that are concerned about their own economy at home, and their ability to make those more expensive long-haul trips to our continent may well be impacted. Perhaps not yet, but maybe over the next 6 to 9 months or so. That US travel ban that we've seen imposed on a variety of countries, including some African countries, doesn't affect materially the amount of business from Africa into the US or vice versa, but it can affect sentiment. The important thing is sentiment. And that is what we all have to make sure. You know, you can talk about liberalization and you can talk about public-private partnerships. Sentiment is so important when it comes to bringing those travelers in, making them feel as though they are welcome. The decline in the US dollar also affects the ability of Americans to travel, but it's good for us. It's good for African economies, especially those that have high levels of debt in US dollars. That also helps, especially for countries with a stronger currency going forward. So all of this uncertainty will affect your industry. Trade uncertainty will impact air passenger demand over the next 2 years or so, and these are the projections now for this year and into the next few years. You can see a moderate, but nevertheless existing drop-off in air passenger demand in the next year or two as a result of uncertainty. It sounds all bad news? No, there's good news as well, everybody. It's not all bad. And despite the fact that travel demand has weakened, it still remains buoyant. And when you look at outbound trips by region for this year, the latest indication is that we will still see very strong outbound trips coming out of Africa this year, positive in general. So it's not all bad news for that matter. The Africa year-to-date market performance is also very, very strong in terms of Africa's RPK, well above the global average. So despite the headwinds and the warnings that I give you, the overall figures still look pretty positive for our industry here on the continent. A little less so for cargo, and I would expect those trade issues to impact cargo, at least in the short term, until there's certainty. So Africa's RPK generally looking better, and the regional contribution to industry-wide RPK from this continent also looking that bit better, and that's why John has got those airlines here, because they see in a world of more limited growth and limited options, the better growth options. It's not perfect, it's not rah-rah stuff, but it's better than most other regions of the world, and that's here. Airline seat capacity is strong and remains strong, certainly for us on the continent. Our load factor is still relatively low, in fact, very low in global terms, but the increase in load factor, very competitive with the better performances in other regions of the world. But our volume of departing passengers on this continent, which you can barely see at the bottom of this chart in gray, look at the rest of the world. I mean, good heavens, that's got to be improved, and that's only going to be improved by better GDP per capita, better growth, and better governance, I might add, across this continent. So baseline growth for African aviation, and you can see there's African aviation on the right-hand side of the chart at 3.2% or so, looking relatively, the baseline growth is 4.1%. The second fastest growing, well, more or less, Asia Pacific looking good at 4.3%, Middle East at 5.7%, but we've just about tied as the second fastest growing from a baseline point of view growth performance on the globe in terms of aviation. And that's also why you're here, and that's also why we can remain pretty positive about the overall African aviation scene. Domestic flights across Africa, to me, should be a focus. Yes, we need to bring those foreign visitors in so they can spend here in Stone Town. But if we are going to grow as a continent, we need connectivity from city to city. We need domestic connectivity across Africa. And I met a lovely person here from Banjul just in the last day or so, and she was telling me how many hours it took for her to get from Banjul to Zanzibar. It's those domestic continental connections that absolutely need to be enhanced. And as IATA have said only this month, only 19% of intra-Africa routes have direct flights, 19%, forcing our passengers to take longer journeys. There's good news, borders are opening up. We're seeing a more liberalizing visa regime. It's got its issues, but at least it looks a lot better than before. More countries are accepting visa-less travel. But as I say, or as the famous saying goes, we've been doing these talks for a long time, we've been doing these conferences for a long time. The more things change, the more they stay the same. Some of the issues that we've spoken about, we've been speaking about for many, many years. The input costs across this continent to run airlines, very, very expensive, and I cannot give you better data than that from IATA just in the last short while. 17% more expensive fuel charges, 15% higher taxes and fees, and all of the additional costs relating to the higher ticket prices that all of us experience when comparing prices to other parts of the world. Of course, the challenges remain. This continent has old airline fleets. And of course, we need fleet renewal, and we need the capacity to pay for that fleet renewal in an environment in which sustainability becomes important and cost effectiveness becomes important as well. So the opportunity, of course, for aircraft manufacturers should indeed, in theory, be extremely positive given those growth numbers and given the need for Africa to really take a lead in revitalizing its aviation industry. But you won't do that, of course, when there are bottlenecks like blocked funds from so many countries hampering sentiment for doing business, when there is still protectionism. And protectionism comes in different forms from different countries, and some countries are reinventing themselves when it comes to protectionism as well, in an environment in which Satam and Yamoussoukro just seem to be stuck in the mud to some point of view as well. It's a tough environment, the same issues. The airport charges, the taxes levied in certain countries, extremely onerous and off-putting for domestic passengers, particularly those who want to kickstart their businesses domestically on the continent, other than external factors as well. There are safety issues as well, particularly in the South African aviation market as well. All of these factors we've spoken about, you'll cover aspects of them over the course of this conference. So, what's my message? It's a difficult environment. It's a changing environment. The big superpowers of China and the United States are looking at being much more competitive globally, and we're going to see that play itself out here on our continent as well. There are storms. It's turbulent. It's a fasten your seatbelt time in general, not just for the aviation industry, but I think for the world as a whole. But it's an unpredictable time as well. You just never quite know what's going to happen next, everybody. The position can change, and you've got to really up your game to understand the nuances from all of the competitors, not just the competitors in the aviation game, but the investor competitors as well, and what they want and how different countries are going to demand from you when it comes to what you can offer them. It is a more transactional world than ever before. So finally, you'll be pleased to know my final slide in this record amount of slides that I've gone through with you. This is an era in which global turbulence makes it essential to recognize aviation as a key driver of economic growth and a vital enabler. If we as a continent are going to succeed, that recognition has to go to the top. It was recognized here absolutely in the President's address this morning. It's got to be amplified in all levels of society. I know Aviadev is always part of that lobbying, but you all in the industry are part of that lobbying as well. There has to be an acknowledgement that aviation's expansion fosters social development and regional advancement that promotes meaningful policy reform and more effective implementation. Fancy words, I've said them before, and if I'm ever asked to speak again, I'll probably say the same words and just rephrase the sentence so it sounds fresh to you all. And lastly, if I might say, it is crucial to support, pressure, and lobby for open market dynamics. I've been talking about open markets, about free markets, about liberalization for years. Yes, we often go 2 steps forward and then we go 1 step back. There is a trend to be more open in terms of how we deal with the policy, but that trend is scuppered very often as well. We need to liberalize, and we need public-private mixes across the board. And we need to have those public-private mixes and liberalization to offset the protectionist impulses that are still being felt across this continent and elsewhere as well in the world as well. And we need to battle against those protectionist impulses in addressing the existing challenges and fostering growth. So it's an opportune time, I think, John and Aviadev, and for all of you here, to look at the global headwinds, to look at the positioning of African aviation as a leader in terms of broader aviation growth in the world, and obviously at the potential of this continent, given rapid urbanization, rapid population growth, and rapid and increasing cross-border trade that will necessitate the freedom of the skies from place A to place B. It's a wonderful place to work for me across the African continent. It's fresh, it's new, the base is low, but it's raised every single day. This is my 4th visit to Zanzibar just in the last 24 months. And every single visit, for that matter, has been filled with pride and enjoyment and enthusiasm for the development and the friendliness of the people that I've experienced on this particular island. So all I can say to you is, we're in the right place, but that doesn't mean that you can sit back and relax. They didn't provide you with live flat seats here in this audience. It's tight leg space here, so you can't relax here today, and you can't relax when it comes to addressing and taking so many of these issues forward. And I look forward over the next few years to see the progress that I know Aviadev is involved in, that I know many of you are involved in terms of your particular industries. And that progress, sometimes slow, sometimes frustrating, but it's got us all here today. And when you think about the fact that we are all here in Zanzibar today, took us some longer than it took others to get here, that progress to get us here is testimony to the progress that this industry is beginning to make and being felt across Africa. Thanks so much for listening to me this morning.